Hello and welcome to a lovely spring day in London. We're going to concentrate on the ECB now. We know that Mario Draghi is the king of the grand gesture, but what about the details? I've been speaking to David Starkey ahead of the key European Central Bank meeting. Okay, so let's start by talking about the ECB. Obviously, it's all about that key press conference afterwards on Thursday. What are you expecting from it, particularly in terms of the QE programme?
Yeah, so our key points that we're watching for are going to be mention of the effects of the quantitative easing programme. Last week at testimony in Brussels, Draghi already mentioned that we're seeing greater confidence and lower borrowing rates in money markets and bond markets. So further reference to that is good news for the euro. Additionally, we're going to be the other risk factor we're going to be watching out for is Greece. Draghi mentioned during testimony that he would be willing to review the withdrawal of Greek collateral from the ECB's borrowing programs. Any indication of a timeline would go a long way to give encouragement for the euro.
The Greece issue is all political, isn't it? Because it seems a bit unfair on Draghi because he should be a numbers man, but he has to. What do you think he has to do politically to try and satisfy all parties?
He has to be seen as being very independent and focusing squarely on debt repayments. ECB is the biggest lender to Greece right now. He needs to be seen as being very, very pragmatic into whether or not those debt repayments are going to be made. As far as the political side goes, as a central banker, he has to be steering clear of it as much as possible.
Yeah, and what about the QE programme? What exact details do you think we're going to get? Because he has this track record of saving the euro, as it were, saying do whatever it takes. And now he said we have this big programme of QE, but we still don't really know what it's going to entail. So what do you think we're going to get there?
Key measures for Draghi are going to be lower rates in bond and money markets. If he can be seen to be bringing down those rates, particularly in the peripheral nations, Spain, Italy, Greece eventually, that will be a key measure of success. Additionally, obviously, there's the inflation part. He has to be seen as raising inflation. Now, the most recent flash CPI release came out slightly better than expected, still in negative territory, but it could be a green shoot for success in terms of the QE program. One data point isn't a trend, but it's certainly an early encouraging sign.
Yeah, what do you make about the CPI? Over here, Mark Carney's been very clear, saying it's great for the economy, it's a real short-term boost. In the Eurozone, it's much more complicated with so many varied economies. So with these lower commodity prices, is this a good or a bad thing for the Eurozone?
I mean, lower input costs are certainly good for the manufacturers, and it eases the burden on households as the average consumer is very much a net user of energy, so lower prices at the pumps, lower heating costs. That should be net good news for the euro. I think generally speaking, the short-term risks of disinflationary pressures are offset by the medium-term potential. Yeah,
and what about the euro itself? I'm surprised there hasn't been more of a bounce in the euro. We're used to seeing these muddled solutions for the Eurozone, and that seems to boost the euro even if it's not a long-term solution. So why haven't we seen that bounce this time?
You're absolutely right. It seems like markets are just worn down. It seems that there's still concern about Greece. The extension was 4 months. That's short-term even for financial market standards. So everyone's fully expecting that at the end of the springtime, Greece is going to be back in the news, and that's raised hesitation. And that's on top of the already mitigating factors, including low inflation locally and interest rate expectations out of the United States.
Yeah, we'll also have the Bank of England on the same day. Obviously, nothing's going to happen there in terms of that headline decision, but what's your outlook there?
Bank of England monetary policy announcements have become a bit of a non-event. The fact of the matter is the bank tends not to give a policy statement. So markets don't expect any change. It could very much be an update to a website and then everyone moves on for the day. What tends to draw more interest and anticipation and thus volatility is 2 weeks after, when the minutes and voting statistics are released, at which time the composition of how the voting broke down. Is it going to remain 9-0? Is there going to be someone who's going to return to being a hawk? That will draw much more interest from markets. And then obviously the quarterly inflation reports, which we just had. And Carney walked a very expected dovish and vague line.
Well, thanks to David for his take on events. Stay tuned to Dukes Copy TV for more interviews and analysis, but from a very lovely sunny London, goodbye for now.